And ultimately, if you can do this for some time, you get to do your trading stuff only when you need to, and you don't waste time on the trading part. What's up, traders? Welcome back to Bangkok. Today I want to share with you some tips I have for higher time frame trading. So when you want to trade on a higher time frame and enjoy life at the same time, those are going to be the best tips, and those are things I've been able to learn over the past almost 6 years of trading higher time frame. And this is definitely my favorite way of trading. So we'll jump right into it. Let's get on with those tips. Alright, so I think before we go in, I want to kind of define higher time frame trading, because there are two terms in this that can be easy to flip around, to misinterpret. So first one is higher time frame. What does that mean? So I consider everything beyond the 1 hour chart to be higher time frames, and that could be different for different people. I believe that below that's called day trading, above that's higher time frames, the same as swing trading for me. But I also believe with the word trading that trading is not trading the monthly chart. That doesn't work for me. That's like the monthly chart is about investing. It's long term. Trading the weekly chart is for me limit. I don't trade it myself, but some people do it and they do it well. But I consider for myself higher time frame trading to be more like from the 1 hour chart to the weekly chart. Okay, so I'll include these ones. A 1 hour chart is kind of a limit for me, and although I traded this one, the 4 hour chart is more higher time frame for me than the 1 hour chart, of course. One hour chart is kind of the cutoff, in my opinion. So anyway, I want to share with you 5 tips that I've got for this type of trading. It's going to be very different than trading low time frame, and you got to be able to adapt. The first thing is, you got to be able to adjust your expectation of this type of trading. So a lot of people are going to expect that they can make quick money trading, that they can turn a small amount into a big amount quickly. And that just doesn't work when you trade higher time frame. It's going to take more time. And it also means that when you day trade, you can kind of attach yourself to the trade and look at it and watch it and keep track of it. But on a higher time frame trade, that cannot work, because you have to be able to detach yourself if you're going to be able to enjoy life and not be miserable all day. You got to be able to detach yourself and do something different so you can come back with a fresh perspective on charts. So that for me took a long time to understand, that I had to kind of go away and forget the chart for some time. But over time, the more you do it, the better you get at that. And that's something that is a skill you have to master. So detach yourself from the outcome. And also, if you've been in a trade for like 2 weeks and you thought the trade would make money, don't be mad because it loses money. Okay, that's normal. That's part of life. It's part of a trader's life. So that's also detaching yourself from the outcome. So understand that you might be putting a lot of work, a lot of effort, a lot of time in a trade, but that the trade could still be a loser, and that you cannot do anything for it. You cannot be mad, you cannot do anything to change it. That's just part of life. So that also took a long time for me to understand, but once you do it and once you get that part, it's going to be much easier for you to sustain the drawdowns and losses and be able to recover faster and get back on track faster. So that's the first tip. The second tip I have for higher time frame trading, and that works on most type of trading, you're just going to be able to understand, is decide between whether you're going to trade bounces or reversals and trend. And by that I mean that this is something I learned from one of my first mentor in trading, one of my first coach. And he taught me that difference. So before I was trading like every setup I could find, everything I could find in the market with the same indicators that I was looking for. Now the thing with this is that you don't differentiate between a bounce trade and a reversal trade. So what I mean is, a bounce trade is a trade that's like quickly, it's like a move and then you trade the bounce, so the quick move, and then price might fall back down. That's valid. You just have to understand that you have to take profit more quickly on this than a reversal trade where your price comes back down and pushes back up. Okay, that's different. You gotta be able to know what you trade, because a lot of people are gonna trade higher time frame expecting to trade a reversal, but what they're looking at on the chart is a possible bounce, and a bounce is always shorter than a reversal. Okay, so you gotta be able to understand. And same thing goes if you trade trends. So people expect that they trade with a trend, right? That they're gonna trade for the long-term trend, but then they don't understand that the chart that they're seeing right now is more likely to create a bounce trade, where it's gonna bounce a little bit and fall back down, and the trend will stop. So you gotta be able to understand the difference between both and understand when they happen. This is going to take some time for you to look at the chart and to understand what happens when. Look at the context, look at what is likely to happen with this. Test a lot, and then you'll start to understand, well, in this context, because like price makes the same highs or there's longer higher highs or whatever reason you decide, then it's likely to be only a bounce. And that means I'll have to take profit more fast And that's how I'm going to be able to adapt to the market context in that case. Because that's really important. So define that, decide that for yourself, and use that technique to know what you're going to trade. You could trade both, but understand when to trade each one, when to take profit on each trade. And for me, that was solved a lot by taking partial profit, because I found out I wasn't the best at finding that out, whether this was a bounce or a reversal trade. And so taking partial profit allows you to kind of make sure that if the price is going to go far in reversal, you took some partial profit. If price is going to go just close and do a quick bounce, you took partial profit. So you're good. So you can have the best of both worlds. But that's something you gotta see for yourself. Because that's my second tip. Decide between a bounce or a reversal / trend trade. My third tip is you gotta be able to accept the longer feedback loop and the drawdowns. So inevitably when you trade higher time frame, the drawdowns will take more time, not necessarily more trade, but more time, and the feedback loop you get will be longer. So if you develop a whole strategy right now today and you're super happy and you go in the market and trade it, well, it might take like a month or even 3 months for you to get the results of that strategy. Does it work or not in the market? Okay, so you gotta be able to understand that. People that day trade, they might go in the market 2-3 weeks and they say, oh, it works, it's a good strategy. Like, I've had a lot of trades and they have a good result, or I know how to execute it. You as a higher time frame trader, it's going to take you like a quarter of the year to know if you're doing things right and if you're executing right, which is fine. It doesn't make a big difference, but you just got to be able to, as we said in number 1, adjust your expectation, and this is going to be the thing you do in the market. Okay, so that's a kind of thing to master and to practice, but it's not that big when you get to understand it and when you practice it properly. Okay, so just understand that the drawdown will be longer, and the feedback loop you get from the market will be longer as well. It's going to take more time to get feedback from your trades, which I these days don't mind at all. It doesn't make a difference. Okay, my fourth tip is I strongly recommend you develop for yourself a set and forget strategy. By that I mean that it's not about just doing something and then making money all the time. It's about you enter a trade in the market and then you go away. Then you come back only if you need to manage your trade, which you could have to manage perhaps, or only if you need to take another trade or see the chart. Okay, for me it's really more kind of step back, set and forget, in the sense that I enter a trade, I put a stop loss, take profit, and the market will take care of it. Okay, it could be right, could be wrong, it could be a good trade, a bad trade, but it doesn't matter. I just leave and I can leave it there. And I tend to review my trades every day just to see, but I won't act, I won't do anything different on those trades, because that's kind of my style. That's how I like to do it, and I just feel a lot better doing this than when I was looking at my trade all the time, like every day, every hour, every 2 hour, every 3 hour, just trying to see what the trade was doing and trying to see if I had to make something different on that trade. So that for me has been huge. You want to develop a strategy where you have a set and forget approach, where it's like a system, you do it, then you're done. Okay, that's it. Otherwise, it's going to be very easy to turn your higher time frame trading, which is supposed to be kind of off and more relaxed, to kind of pretty much day trading, where you look at everything all the time and you monitor everything and you're there all the time watching the chart, which is not what most people want to have. Okay, so that's pretty big. And finally, my fifth tip is go with trading first and then fulfillment. So by that I mean, this is kind of not super clear, but what I mean is, do your trading stuff first in the morning, whenever first means for you. Could be at night, could be in the morning, so you could prepare the day before for the day ahead, whatever. But you do your trading stuff and then you do something that's going to fulfill you more. Okay, so for me, trading is not fulfilling. Trading is something I love, I find it interesting, challenging and stuff, it's good, but I want to do this all day. Okay, so I have to mix trading first, usually in the morning. I look at my chart, do my analysis and everything, and then fulfillment, which means going out, doing fun things, and meeting people and doing videos or whatever. Okay, and so that's something you want to focus on. So do something about trading first and then do your other stuff outside. Okay, and that's going to make your life much better. And ultimately, if you can do this for some time, you get to do your trading stuff only when you need to, and you don't waste time on the trading part. Which, if you waste time on your trading, like going back and forth looking at trades, that's time wasted. That's time that you don't spend doing something fun. Okay, and you might as well be focused and efficient on your trading stuff. So go look at it quickly, do it, get it done, then leave and do something different. Okay, that's gonna make your life way better. So I hope that makes sense, guys. Those are my 5 tips for trading higher time frame in Forex. Hope that helps. Comment below with your thoughts as always below. Here are a few comments in the past video. I appreciate you guys all the time for leaving your comments below. Those are awesome. I read all of them. If I can help in any way, let me know also in the comment. As always, subscribe if it's not done yet. There's one more video like this every single day. And I will catch you back here in Bangkok tomorrow. Ciao.